The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. We pick things up with 24 minutes to go until the start of trading, and you have markets a little bit mixed right now coming into the opening bell. S&Ps, you drive to a high overnight of 64.21. The Federal Reserve building visit from the president went about as well as it could probably go, right? Quite an interesting moment between the president, between Chairman Powell. We'll get into that a little bit more in a moment. Trump's talking about $3.1 trillion. Powell shaking his head in disagreement next to him. They're shuffling around papers. We live in interesting times, folks. Nonetheless, tensions nonetheless easing. Okay, so you got the S&P right now up by 4 points, 64.05. NASDAQ 100 down by 13 at 23,364. You have the Dow in positive territory after giving back some of those gains that it had this week yesterday. UNH trading lower yesterday among many. Dow up 39 points. 44,937, and the Russell up by 6. Bitcoin pulling back a bit. There's a slide for you. From about 120,000 to 116,000. And we actually hit 115,675. Bitcoin down by $3,000, we'll call it. 117,155. Ethereum, not quite the case. Interesting to see the divergences going on between Bitcoin and Ethereum. Ethereum down by $29 right now, less than 1% at $37.53. You got crude this morning chopping around near $66.31. We jump to yields. The 10-year right now, lower price, higher yield. The 10-year, well, I say lower price, barely, just at the lows of yesterday right now. And we got a 10-year yield flirting right near 4.4%. We're talking about 4.41 this morning. Okay, so 10-year, 4.41. Dollar weakness in focus, but not today. You're catching a bid at 97,798. And to put that back on a daily, there's your daily. Now, I say not today, okay? This is a well intact trend, folks. Lower lows, lower highs. We just drove down near the low, and nonetheless, we're bouncing today, though. You got the dollar nearing 97.80 right now. And what's tough here is there's no reprieve for gold, right? The dollar trades lower. Gold trades lower yesterday. Dollar catches a bounce today. Gold trades lower today. Few gold bugs out there. I love me some gold, but we're in a consolidation, man. Gold's got to breathe right now. Okay, we just traded on a completion of an A to B, C to D. We've covered it many times. You blow past that B point, you complete the 1-to-1, you drive up there late April with some real volume to 35.09, and we have now been chopping around at this consolidation for the better part of 3.5 months. And you can see that it took about 3.5 months for the consolidation before the second leg. And folks, it can take a lot longer than that sometimes. All right, you look at some of these consolidations. How about a consolidation from March of 2020 until March of 2024 that you took off? Now, even if you made the case that you broke higher in April of 2020 above 1640, right? You break kind of that high area consolidation we got back in 2011. And then what do you got to do, though? You got to consolidate near that area for the better part of 1, 2, almost 3 years before you break higher. Okay? And you see these types of consolidations that last years after the runs we've had. We've had quite a run, folks. Nonetheless, gold this morning, but yeah. And not to harp on it, but pay attention when gold is trading lower when the dollar bounces and gold is trading lower when the dollar goes lower. And that's what's happening right now. Yesterday, the dollar was going down. They were selling gold in tandem. Today, the dollar is going up. And even with the dollar going up, same deal. That's how the relationship usually works, right? Stronger dollar, weaker gold price in that stronger dollar. Nonetheless, gold off by about 1% right now, off $33 at $33.40. You jump over to silver this morning. Silver down about 25 cents at $38.98. Quite a run for silver as well. Talking to Tim Ward yesterday, he was taking a look at some of these tiny silver stocks. Oh, should look at silver on a longer term chart, man. You're coming into the highs of 2011. Now, silver had a stratospheric run back then. All right. But yeah, you're talking about a run where silver just went from 17 to 40, folks. 17 to 40. Let alone cherry picking the lows of 2020 when we were at $13. Quite a run for silver. Some of those silver stocks, quite a run as that market digesting some of those gains. And yeah, you better believe silver is going to take a little bit of resistance at these price levels coming into these spike highs from 2011. Okay, so let's talk a little bit of Fed, man. So the front page of the Journal, and there it is. He visits the chairman. They do a walkthrough, hard hats and all, right? There's your photo op, checking out everything. Talk about a high pressure. I mean, you know, this. Imagine being this construction worker, and when you know, in the heat of all the political turmoil here. But nonetheless, they do the walkthrough. Tensions ease. Trump says he's not going to fire Powell after doing a walkthrough. All right, but you take a look at some of the details. Okay, of this. Now, this is an older article. When was this from? Yeah, last week, July 19th. Okay. I'm going to share this one in the Tiger's Den just because it's a great take of whether it's regulations, whether it's cost, whether it's the cost of any job, folks, since 2022. Okay? I'm in the real estate business now more so than ever before in my life. Costs overrun, if you're comparing anything to a cost number from 2022, yeah, it's not even close. Now, I'll post this, like I said, in the Tiger's Den, okay? And it's just an interesting one. Looking at number one, they got a lot going on here. First of all, okay, these buildings haven't been done in almost a century. Secondly, you can't build too high because they are at the core of the Washington facade, right? They have many different, they got all these different regulatory boards, okay? And let's get into where we are. Let's see. So the project was always going to be tricky. The initial cost was $1.9 billion, folks. Realistically, that is not that large of a cost overrun. Yes, it is $600 million, but percentage-wise, from where that number came from, the year it was, and I'm not defending the Fed or the chairman. This is just interesting when it comes to real estate, okay? Neither the Eckley's building, okay, nor the East building has ever been fully renovated since they were built nearly a century ago. Yeah. Now, the price of structural steel, you think that one's going up? Yeah, you better believe it has. Skyrocketed just before construction, okay? Any building project in Washington's monumental core, that's what I was looking for. And it should be. Of course you need regulations in an area like that, right? That's the core of our nation's capital. And you know, I went on I remember a high school trip visiting Washington, D.C., let alone in college as well. You got new standards in there, but that monumental core is covered by a design oversight board, a bevy of design oversight boards. All right, we'll finish it up, but they talk about some of the cost overruns of some of the other buildings that have been done recently. We'll talk about it. We'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now up by 3 points. NASDAQ 100 slightly in the red. We jump around to some of the biggest equities out there. Apple shares slightly in the green this morning, up to 214. You jump over to Google. After their slide yesterday, we're trading just slightly in the green as well. 193.69. We were pushing 199 on their numbers yesterday. You finish in the positive, but they gave back a substantial portion of those gains. They're going to be spending a lot of money on CapEx. That's going to be a tough one, weighing these tech companies down. Meta going to be up by about $1.50 this morning to 716. Amazon had quite a day to the upside yesterday. Slightly in the green this morning as well. And you jump over to NVIDIA, maybe the big gainer yesterday on those CapEx numbers. NVIDIA shares slightly in the red so far this morning. All right, jumping back to that Fed story. This is what the Federal Reserve Board building looked like in 1935. 1935, 90 years ago, folks. Now, what they talk about, okay, is that you can't build too high in this part of the area for obvious reasons, okay? They protect the skyline for obvious reasons. It was supposed to cost $1.9 billion, okay? And here we go. As I mentioned, the bevy of design oversight boards, okay? You have any federal security standards adopted, okay? And the renovation of structures built during the New Deal has to account for federal security standards. Goes everywhere, as it should be probably for something like the Federal Reserve Building, okay? Now it gets into how they go below ground. A 5-story addition on the north side boasts 4 extra floors below grade. A common trick in Washington where heights are capped and historic vistas are protected. Below the south lawn of the east building, a 318-space parking garage is being added. And yeah, building a new basement below an existing structure is a huge undertaking for obvious reasons, okay? But what makes it even harder is where they're building it, man. This area, okay? You're talking about 1,000 micropiles, which are deep foundation steel elements used in ground conditions that don't allow for a traditional piles. And yeah, this is where they get into some of the other costs. And this is where, to complete the Smithsonian's National Museum of African American History and Culture, more than 60% of which is below grade on the National Mall, architects had to design an enormous bathtub to keep the water table out. Where they are, it used to be marshes. Yeah. So construction costs of that building that I just talked about, okay, and we'll get into equities in a moment, but this stuff is, which opened in 2016, reached $540 million, 50% more than the initial estimate. And, you know, to Powell's credit here, okay, any Fed chair could have done this. They have a lot on their plate. None of them did it. He did it. And this is the reason why none of them did it. It's a no-win situation to a certain degree. This isn't his, right? He's gone. His term is done in May, and he's probably going to leave. This whole deal that, like, he spent all this money and he's making it all lavish, okay? It's unfortunate where the conversation devolves to on most occasions. And this is the kicker that gets it all. Design plans for that Eccles building have changed significantly since they were first introduced. During the first Trump administration, architects, at the request of the Fed, proposed using more glass. But Trump appointees to the U.S. Commission of Fine Arts asked for more white marble to align with a proposed mandate from the president requiring all new federal buildings to be classical in style. You may agree with it, you may not. No matter what, it came down from the president, and that's why you got marble, folks. So it comes full circle that then Trump comes back and says, why you got marble in here? It costs so much money. I mean, these conversations, man, okay? But nonetheless, that eases. We go through the theatrics. He does the walkthrough. Folks, regulations, I cannot fathom. I mean, when they're talking about building, the last part of this we'll get into, which is the most interesting, is that when they're talking about building extra floors below a certain area, you got to add a foundation below, okay? And this is where, this is the one. In a video posted on YouTube, okay, they built a bracing system above the slab. You have to brace the whole area, right? And then you have to take the foundational slab, right? Demolish it and lower the basement level 20 feet. Yeah. Deep foundation, steel elements used in ground conditions that don't allow for traditional piles, 1,000 of them. 90 years. Anyway. Regulations, folks. Okay, that's it. It's regulations. We deal with it all the time. Being, you know, I can't imagine something like that, let alone the regulations I go through with single-family houses in St. Pete. You know, my dad, towards the end, we were looking at building a 6-unit apartment building. And for you real estate entrepreneurs out there, for lack of a better term, if you take one thing from this whole conversation, folks, regulations, okay? The leap from a commercial to a residential or residential to a commercial. So you can build 4 units as part of a residential. Okay, that's a residential build. It's not a commercial build. You go up to commercial, and then you got to deal with fire sprinklers. You got to deal with handicap parking. You got to deal with elevators depending on where you are, right? All this stuff that meets all the codes once you go to commercial. If you stay 4 units or under, it's residential. And the vast differences in those two are monumental, folks, to put it lightly. The cost of just the architecture, plans, engineering alone for making sure, whether it's the fire code, right, the sprinklers, as I mentioned, and the likes of it, let alone you building something like this. Okay, let's jump around to some fundamental news this morning. Core capital goods. U.S. core capital goods orders decline amid policy uncertainty. So orders placed with factories in the U.S. for business equipment unexpectedly declined in June. And yeah, suggesting companies remained cautious about capital spending. okay? Now, you look at these numbers. The value of core capital goods orders dropped 0.7% last month after an upwardly revised 2% gain in May. Bookings for all durable goods. These are items meant to last at least 3 years, and including orders for commercial aircraft and military equipment, fell 9.3%. Now, Boeing can always move those numbers, okay? Because commercial aircraft, Boeing, it's a big part of it. Yeah. And it would make sense. As in, why not hold off for a couple months, right? Let the volatility sort out. If you're making big capital decisions for costs that are going to be for 3+ years, probably much longer than that many occasions, people are just being a little cautious. S&P's up by 5. We're coming right back, folks.
Skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps open up the session up by 4 points right now. NASDAQ 100 slightly in the red by 21. The Dow up by 48. And let's check in on some of the movers. Yeah, UNH yesterday. You talk about a move today. You drive down to 273. You talk about some volatility, baby. We're back to 281 just like that. We take a look at the daily on this thing. And boy, you talk about a drop-off. You put things on a weekly. That's where it really just jumps out. I mean, all those gaps don't make it look as pronounced as it does when you take a look at the weekly in that red. My goodness. All right, how do you find a bid on that chart? Not just yet. You can always say you catch a falling knife, but nothing on that chart on a weekly basis screaming strength just yet. You are up by 1% today so far for UNH. We'll see where we go from there. Jump around some other equities. Chipotle Mexican Grill. Talking about Chipotle in the den today. And yeah, nice technical area in terms of driving down to this area. The lows from April. You hit a low of almost $45 yesterday. You're up by 1.3% today. We check in on Google, up by 0.1%. We check in on Tesla following their numbers last week. Tesla shares up by 1.3% right now. All right. We jump around to what else we got going on. This one's an interesting one. So talking about college sports, man, everything is changing so quickly. So this one was out last night. Trump signs a name, image, likeness overhaul order to curb big money influence in college sports. The tough part about this is you can't take out the big money influence in sports if there's big money in there. You know, that's what I don't get. It is a professional league for all intents and purposes. When you talk about the NCAA Division I football, I don't know how the NFL gets away with their farm team being something that they do not need to put any money into. These, I say kids, they're not kids. All right, they're 18 years old. You're not allowed to discriminate by age, and this is what always blows me away on this story, right? You cannot discriminate by age when hiring somebody. It's age discrimination, period. It's illegal. And somehow the NFL, with collective bargaining, okay, and union and all this stuff, right? You can't enter the NFL at 18 years old. Can't do it. They won't take you. And meanwhile, then you have trouble getting paid what you actually are earning for market rates at the age of 18 in the only league that's possible to get into the NFL, which is college football, right? So, of course, money's going to run everything, okay? But nonetheless, the order, a fact sheet that was shared in advance with NBC, notes that recent court filings have dismantled the NCAA's transfer and recruiting rules and created a chaotic environment that threatens the financial and structural viability of college athletics. True. Okay. Now, the order signed an executive order prohibiting third-party pay-for-play payments to college athletes. A move the White House is taking to curb, quote-unquote, bidding wars that have roiled college sport. What is wrong with a bidding war for talent? That's what I don't get through all this. Of course there should be bidding wars. Now, this is the tough part. How do you protect the sports that aren't doing that? Right? I don't know what the percentage is, folks, but I'm sure it's 90, 95, maybe even 99% of college athletes are just doing college sports to do some college sports, right? But that's not what Division I college football is, okay? It's not. The order looks to protect women's and non-revenue sports by mandating that revenue sharing between universities and college athletes be implemented in a manner that protects those programs. Well, that was the argument all along when they weren't paying the players that were driving all that revenue. Because the school's got enough money. I shouldn't say it. They don't have enough money. But anyway, it's a professional league, man. These players deserve everything they're getting. What I always love about this is that, and this is the only check you have to run your mind through, folks, okay? The coaches on these teams are never supposed to abide by the rules that the players are supposed to abide by when it comes to how much money they can make. That's it. That's all you got to know about how fair it is. Okay? The players are getting hosed. They're young. They're the ones. And then you got coaches making more money than God, being the highest paid state employees ever. And meanwhile, they're worried about bidding wars for players who are the ones who are really on the field. That's the way it's going to work, man. There are billions of dollars at stake in college football, right? Basketball, college basketball is the same deal. Yeah, and sports, and then, so, of course, that goes into the WNBA. And here's all I'm going to say on the WNBA, right? NBA makes a lot of money. WNBA is on the rise dramatically. How much those players are due Unfortunately, it gets super political, okay? But here's the kicker of it all. They want what they're doing. What I struggle to understand why the conversation doesn't shift to, right, is, and there is a women's professional hockey league, okay? And the kicker is, this is the cool part, okay? Women's professional hockey, and this is where you can see there's room for progress on the WNBA, and I'm all over the place today, folks, but we're talking about college sports, we're talking about business, we're talking about finance, okay? In women's professional hockey, I got to get the exacts of it, but I'm pretty sure that they can make higher than even the WNBA. Let me see. All right, I'm going to have to pull it up and get the exact standards. Here's what I was going to say is, where are all the other women's sports? Why? The WNBA is not making money. Where are the players? What about the women's hockey players? Why aren't they making that, right? What about women's softball players? Why aren't they in the conversation? Why aren't they getting millions? Why aren't they getting private jets, right? Why? There's a women's sport to every men's sport that exists, basically. And why is the NBA the one that's in focus? That's what I don't understand. Where is the argument for the other women's athletes if it's in par? That's what I don't understand. Where the other athletes aren't like, yeah, pay us what we're worth too. If we're just talking about it. I mean, where's the women's hockey league? Has anybody ever heard of women's professional hockey? It does exist, but compare that to the WNBA and the headlines that exist now. Caitlin Clark has brought that to extraordinary heights, but nonetheless, we jump around, man. We're all over the place today. We're talking real estate, zoning laws, and college athletics. Let's talk a little bit of equities. All right. Yeah, we'll talk some Fed. Here we go. We're going to talk some equities, folks. All right. Yeah. Hey, women's golf. They get paid plenty, right? Why do they get paid plenty? You know why? Because they're making money, right? Anyway, that's where. So I was fortunate, folks. I went to school, Noble and Greeno School in Dedham, Massachusetts. Okay. And one of the best parts about going to that school, an extraordinary school, I was so fortunate to go there, folks. If you're looking for an amazing school and you're in the New England area, Noble and Greeno, Dedham, Massachusetts, 10 Campus Drive, Dedham, Massachusetts, are absolutely amazing. One of the best parts about going to that school, outside of the outstanding education, the people I was surrounded with, is that they had every kid, as part of going to that school, had to do 3 activities, folks. Fall, winter, spring. You got to get kids in activities, playing sports, playing with kids their own, and it was boys and girls doing sports 3 seasons a year. We're coming back. We're going to talk some stocks. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Excuse me. Welcome back, folks. We have Airbnb. We take a look. Quite a run from the lows of about 100 to 141, well off the highs of their earnings about 6 months ago. And yeah, we're going to be coming into their numbers in the next week or two. But you take a look at Airbnb. This one from the Journal, talking about here the headline: can Airbnb redefine travel again? Well, who doesn't want to become the redefining nature of a whole industry like that? They want to become the everything app for travel, but the economics of travel experiences are tougher. That's how they put it in the Journal this morning. Now, it's been a roller coaster for this equity since they IPO'd right on the heels of COVID. They're making a renewed push into what it calls experiences and services. All right. They tried to do this in 2016, failed to gain traction. They overhauled the app in May. Airbnb redesigned its interface to spotlight these two categories, framed by sleek visuals and trusted reviews, encouraging travelers to spend more of their trip money through the platform. It's so difficult, man. You know, as somebody that's on Airbnb all the time, because I have at least one unit on there all the time right now. I've booked on Airbnb as many times. I'm not booking on an Airbnb and then saying, now show me how to spend my time, okay? Options range from surf lessons in Hawaii. And yeah, they're going to get some business here, but it's so difficult to encapsulate everything and be the everything app. Foraging for truffles outside of Florence, ordering a massage at your rental home, right? What do you think a massage is going to cost you if you're ordering it through Airbnb? My goodness, right? And yeah, they're going for it. Nonetheless, you take a look at Airbnb, forward price to earnings ratio. You look at it versus something like Bookings Holdings. Okay. Yeah, you're well above their PE. You're talking about a PE that's pushing 30 right now, and you are constantly about 7 times, like 7 ticks higher, you could call it, multiples higher on a forward PE at 30 versus Bookings being at about a 24 right now. And yeah, they're thinking they can rely on the brand, but the brand's already why they're trading higher. As in, imagine that, right? They're thinking the brand. Yeah, we take a look at this equity. Longer term? Yeah, let's go back to the IPO. So there it is. They IPO right when the market was running perfectly. You double top at about 210 to 220, and then boom, you fall out of bed. And we've been chopping around between about 100 and 160 since then. We take a look at the volume. Let's see what we got going here. All right, so we got some real selling off the top here. Look at that. That's right where we are, man. You always can just go to the volume, folks. This is a tough point. We've struggled to get above it. We've gotten above it a couple times and given it up, but you're going back to 105 million shares on a weekly, September of 2023. And look at how last August, quite a sign of strength in February on their earnings. And now you're trying to climb back into that bar. We're at 141, but look at the volume drop off. And this is common throughout the market right now, but quite a volume drop off recently. Let's just zoom in. Lower lows, lower highs. And that's not how trends work, but in general, right? Since about April 28th, the week of, less volume, less volume, less volume. That was the week of July 4th when you did half a week. So that's a pronounced volume level that wasn't actually as low as it appears. But yeah, then you do 19 million, then you do 17.6. And as we come up to test these highs, geez, and we're going to close above them on no volume whatsoever. Look at this. We've only done 11.6 million shares this week, folks. You did 12.8 million the week of July 4th when we only had, 3.5 trading days. It's going to take some work to get through that. And you are talking about right now a company, folks. I mean, they pushed it out right at the right time. Market was on fire. $87.5 billion company still. Yeah, on a daily basis, look at that gap, man. Well, keep your spikes up if you're in that equity, folks, because as you can see, this is a daily going back 365 days. The only times you got above this price point were 6 months ago when you jacked above there on earnings, and then market volatility did not help, but you gave that up in no time, man. And so we're right back to where we were. All right. Let's jump around. You got Apple shares up by 0.2% right now. Amazon slightly in the red. Tesla, little lift off their numbers yesterday. Quite a volume of selling yesterday on their numbers, up by 1.4%. Nvidia shares flat right now at 173.69. As the markets roll over a bit, you got the NASDAQ going red right now. See Google up by 1%. There you go. Meta up by 0.4% right now. Netflix 11.79. We jump around. Warner Brothers Discovery off by about 1% right now after hitting 13.68 yesterday. Paramount up by 2.5%, so that deal gets done. Folks, let me tell you, if you haven't checked out South Park, I watched it last night. Oh, man, I thought of Dave White. Dave White used to be a huge South Park fan, folks. Remember Dave? He was a newsletter writer. Great host at TFNN. Used to love that show. I was thinking of him last night. Man, I'd love to see the contract that South Park got done with Paramount to get $1.5 billion. And then come with that in the age of political pressure right now. But man, check it out. It's worth it, folks. All right. Yeah, look at these volume numbers, right? This is just the NASDAQ 100. Let's back it out a little bit. That's kind of what I was talking about. When you look at Airbnb, it's just kind of across the market. As in the volume numbers, less volume, right? S&Ps, similar action. The highs were higher. The lows were higher. And now we're getting numbers. That's July 3rd. That doesn't count. But look at these low volume numbers, right? July 10th, 888,000 contracts. July 14th, 879. Beginning of this week, Monday, 893. The highest for the week total, 1.1. They're very soft numbers for the type of accelerations we're getting in this market right now. Jump over to gold, down about $28 right now. S&P's up by 5. And yeah, with the VIX sitting at 1527, folks, this is what we may see in this market for right now. All right, now, hey, next Wednesday we have Chairman Powell. We'll see if he can upset things, but in terms of the horizon, we have earnings on the horizon, but right now, sailing into a Friday of summer trading, markets near all-time highs, and you got a VIX approaching 15. Trump visited Powell. All went well. No reason to look for a sell-off this afternoon, I don't think. Stay tuned, folks. One more segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&Ps right now back in positive territory by 6 points. You see a little bit of volatility. These are 5-minute bars on the S&Ps. Each bar just chopping around at about a 5 to 10 point range. NASDAQ 100 catches a little bit of a lift on the open. We're above where we were pre-market. We're up by 14 points. Dow, a little bit of a sell-off actually on the open. The Dow up by 19 points and the Russell negative by 5. Yeah, UNH, look for some volatility there, up by 1.5%, following the slide lower yesterday. Goldman Sachs up by 0.4% right now. We check in on some of the meme stocks. American Eagle up by 3.5%. We got meme stocks back, baby. Kohl's down by 5.6% right now for Kohl's as well. Let's check in on some of the airlines. Quite the number for American yesterday. You're down you're up 0.4% right now. Jump over to Delta. Volatility yesterday as well. Delta down by 0.4% right now. United up by 0.2%. And JetBlue, yeah, every time I'm hoping, folks. I'm very hopeful because I say to myself, right, boy, if I can find when an equity like this catches a bid, the rewards are going to be magnificent. If it was as easy as like that, folks, right, that would be what everybody did. But it's not. I cannot find a bid. You know, you go to July 10th, that was a good day for JetBlue shares. You got a nice sign of strength there. The low was 436. We're at 433. We're already below that day. All right, you got this low hanging out here of 384 from June 23rd. And, of course, you got the low of 334 with the market on April 16th. Now, keep in mind, folks, that's actually a low below the 90-day reprieve, right? You got the 90-day pause on April 9th. That's a daily. You take a look at the weekly. You got lows out here on the weekly on JetBlue of 342 back on October. But you take a look at the monthly, and it's a tough one, folks. Can't find a bid on that one. You got volume to the downside in April. JetBlue down another 0.8% today. Markets in the green, though. We got the S&Ps up by 7, NASDAQ up by 22. Folks, thanks for kicking your day off right here with me on the Morning Market Kickoff. Stay tuned. We got our man Basil Chapman. He's coming up next. I see him getting in there ready in the Tiger Den with the Tiger Technicians Hour. You got Steve Rhodes at 11, Fast Market at 12, Larry at 1, and I'll be back at 3 o'clock today, folks. Don't miss